Don't invest in cryptocurrency for retirement income. In this episode, I'm going to address the question, should you invest in cryptocurrency? You're going to get my opinion, whether you like it or not, so get ready. So my name's Doug Andrew, and I've been a financial strategist and a retirement planning specialist now for more than 47 years. So I've been around the block a long time. I started in 1974. Well, back in 1974, if you would have told me about a thing called cryptocurrency, I would have done, what? What are you talking about? But I have belonged to several mastermind groups, and I've been part of Strategic Coach. Dan Sullivan has coached over 6,000 of the world's top entrepreneurs, and I was honored to be in his groups for more than 2 decades. It was there that I met Joe Polish, and I became a member of the Genius Network and went to many of those mastermind groups, but also Peter Diamandis. Peter Diamandis wrote the book Abundance, and he also, in partnership with Dan Sullivan, started what is called Abundance 360. And that's where we began gathering every year. I think it was back in 2011 or 12. And we would see the latest and the greatest. And I remember Peter Diamandis giving us some Bitcoin. And he had some little like ATM type machines there in the Beverly Wilshire Hotel there in Hollywood area. And you could actually buy Bitcoin, but he actually gifted us Bitcoin and said, this is going to be worth something a lot someday. And a lot of us went, yeah, right. But that was back when it was around $1. I've seen Bitcoin go up to 60 and 70,000, down to 30,000, and it is so volatile. So I'm going to give you my opinion of what you ought to do if you're interested in cryptocurrency. It's not just Bitcoin, it's Ethereum. There's all kinds of cryptocurrency out there, and you may be very tempted to put some serious cash in there, but I want to give you some warnings, and this is my opinion only, so get ready. So cryptocurrency is unique in that it doesn't have anything really backing it. And a lot of Americans may not remember back when I was younger, in my career, because I've been doing this now for 47 and a half years. We had a currency, the American dollar was a silver certificate, meaning the Federal Reserve had silver or gold that they kept on hand that backed every single one of those certificates. And so I could go to the Federal Reserve Bank and I could turn in the certificates and they would give me silver. They have not had that type of a backing for a long time. We have fiat currency where they changed it from silver certificates to a Federal Reserve note, meaning the Federal Reserve Bank was issuing you a promissory note that they would honor this note, this piece of paper you had, based upon the value that basically created out of dollars in America. And this doesn't look like it's going to have a good ending somewhere at the end of the day. But that's where this type of currency that doesn't have any kind of backing came from. So cryptocurrency is where people are able to use just a digital medium or exchange for something, and it is kept track of out there in the cloud and what have you. And I've actually had Bitcoin that I can't even locate, and it's because when it first came out, a lot of people didn't take it seriously. And so you have to keep track of it or it's gone forever. So who gets it? Well, you shelled out money for it, and it's just part of that. But the supply and demand is basically what causes the cryptocurrency to go up or down in value. And then you have to have merchants, suppliers, Amazon, they all have to say, yes, we will accept cryptocurrency, accept Bitcoin or Ethereum or what have you. And so the price and value goes up and down based upon that and what people are willing to pay for it or what they deem has the value. Now, that may be intriguing to you because you've heard of people who bought Bitcoin for $1 and then it went up to like $67,000. They went, look at that. Yeah, that is unbelievable, astronomical rate of return. But when people start looking at that and greed kicks in and people want to get rich quick, oftentimes the biggest mistake they make is using cryptocurrency for your serious cash like retirement. And that's where I would issue you a warning. Now, before I go into when you might consider investing in cryptocurrency versus saving your serious cash for goals like retirement, if this is intriguing you, be sure and share this video, post a comment, click like. I'm not an expert on cryptocurrency, but I am an expert on people preparing for a comfortable retirement where they can have a predictable income stream. And that's why I do not believe in cryptocurrency for retirement. If you want to learn how to have predictable rates of return with your serious cash, I'm going to gift you a copy of my most recent best-selling book, The Laser Fund. This is designed to be able to give you predictable rates of return and cash flow so that every $1 million that you have can generate $80,000, even $100,000 a year of tax-free income. This is where a lot of real estate investors put their serious cash for income rather than relying on the real estate being rented out versus sometimes when they have vacancies. This is also true with using cryptocurrency. I do not recommend you use it for retirement. So stay with me. I want to gift you a free copy of this book. You'll be able to go to laserfund.com and claim your free copy. So let's talk about serious cash. When you are setting aside money for future goals like retirement, you want to make sure you do not jeopardize that money where you can get predictable rates of return. Predictability is extremely critical. Now, when people say, come on, Doug, cryptocurrency is a thing of the future. Well, I have some strong opinions of where that's going to end up. In the meantime, if you want to play with some of your money that you can afford, maybe not to lose, but that you don't care about the rate of return and it jumping up and down, you can play with some of your money in cryptocurrency. I mean, it may be fun to watch it go up and then go down. As of the recording of this video, I have seen Bitcoin, Ethereum go up and down with 50% swings in a matter of just a few days. Do you want your retirement nest egg, let's say $1 million nest egg, to be worth $1 million one day and a week later $500,000? This is the kind of volatility that we're seeing with cryptocurrency. That does not allow you to have predictable income. So I would recommend that you use instruments like the one I just mentioned, the Laser Fund, so that every $1 million that you have can generate $70,000, $80,000, $100,000 a year of tax-free income for as long as you live. That's what you need for retirement. So as I mentioned, there's a lot of savvy real estate investors that I've had as clients, and they will use real estate. Some of them buy big projects and apartments. They fix them up and flip them. Some have big portfolios, but most of them keep their money liquid and safe in a portfolio of laser funds. And this is what they use in case the apartments are empty so that they can have predictable cash flow. They use it as their working capital account. Many of them do not rely on the rental income for retirement. They take the rental income or positive cash flow and they put it over into the laser fund. I would recommend you do the same thing with cryptocurrency. If you invest in it and it doubles or triples, don't get greedy. You cash in, you take your cash, put it over, take your profits off the table, put it over in the laser fund. And even though cryptocurrency may spike again, that is not where you want your serious cash for retirement. It's too volatile. So let me give you my opinion of where I think it's going to end up at the end of the day, and why I like to put my serious cash into something that would be the last domino, so to speak, to fall if the total monetary system in America collapsed, which I think is going to happen someday. And I'm not a doomsdayer, but I am a realist. So, as a realist, I believe someday the monetary system in America will likely collapse. Now, if you're a religious person, many Christians or religious people, they will study prophecies, for example, in the Bible, in the New Testament, the last book of Revelation. It talks about in chapters 17, 18, 19, that at some point there will be a total financial collapse because there is nothing backing it. And it will all crumble and fall apart in one single day. Now, I'm not here predicting cryptocurrency is really what it's talking about there, even though it could be. But when you have nothing backing that currency except what people are willing to pay for it or what they say it's worth, it could all crumble in one single day. And so that's why I say for retirement, I like to put my serious cash, if I make money on cryptocurrency, take your profits off the table, put it into a portfolio of laser funds to be able to have the greatest liquidity, safety, rate of return, and tax benefits. Now, some people say, well, why won't that be affected? It could. But the reason I have my money in a laser fund, or several of them, is because those are deposited into the multi-trillion-dollar legal reserve insurance industry. This is where banks and credit unions put your money that you deposit in them, and they will take 30 to 40% of their tier one assets for liquidity and safety and put it into the multi-trillion-dollar insurance industry. They borrow our money, so to speak, banks and credit unions, and pay 1% interest, sometimes a little higher, and do what? They put it into insurance companies and they earn 4 and 5% or higher. How much more is 5 than 1? It's 5 times, it's 500% more. Would you pay $10,000 for an employee that made you an extra $50,000? Would you buy a widget machine for $10,000 that made you an extra $50,000? So this is where you bypass the middleman, the banks or the credit unions. You put your money into the multi-trillion-dollar insurance industry and you structure it correctly, and that's called a laser fund. You can learn about it in the book I'm going to gift you. But if America started to really get into trouble, the banks would be closing their doors like in the Great Depression. 40% never reopened again. Some real estate dropped 80%. But the insurance companies came through with flying colors, crediting 3.5%, 4% interest back then. This is where I put my serious cash so that I would have plenty of warning, foreknowledge to be able to liquidate and be able to use money for gas, groceries, or whatever. But frankly, if it got that bad, the American dollar would be worthless. You better be able to grow carrots in your backyard. So I like to put my money in the last domino that would fall so that if I want to convert it to gas and groceries or whatever, I can. Cryptocurrency, because there is absolutely nothing backing that, could crumble and drop not only 50%, but drop down to just $1 again in one single day, which at the end of the day, I think is going to happen possibly in this country. I hate to say it, but that's why only use cryptocurrency, in my opinion. If you want to play with money but take your profits off, do not use it for a predictable retirement income generating account. So if you want to learn where I would recommend you put your serious cash, go to laserfund.com, click below, laserfund.com, contribute a nominal amount towards the shipping and handling, and I'll fire out a copy of this 300-page book. This will teach you how to diversify and create the foundation for a tax-free retirement. And if you're going to make money off of cryptocurrency in the short run, this is where I would put my profits if I cashed in on cryptocurrency and played around with my money with those types of investments.